Hi, Mark White here. I'm an attorney and the founder and president of Idaho Estate Planning. And this is our podcast. It's a Senior Matters radio podcast. For those of you that might not remember, we had a radio show for 5 years and we moved from the radio to the podcast format. I don't know how it's working. I used to get feedback on the radio. So we'll find out. But people smarter than me told me this is what we need to do. And so today I have some friends on with me. I've got Chris and Shauna Ingram. Hello.
Hello.
Welcome. It's possible that we might be related. It's a longer story. But today, Chris and Shauna are in the, I want to say the insurance industry. That isn't really descriptive, but you deal a lot with insurance.
Yes, we do.
And so, so today we were going to talk a little bit about insurance, yes, but really more about protection, doing some asset protection, making it so that we can sleep at night.
That's a great assessment.
Well, things go wrong, and if you haven't made any preparations, then it can really be bad. And as we were talking about, and we talked about stuff before we got on the air, but as we were talking about before we got on, there's some things that people could do to help protect themselves. And yes, it takes making some sort of a plan, but one of the things that they should be looking at is some insurance, because it can be overall can be a very cheap way to get some really good protection. So let's back up and talk to me about that insurance guy.
All right, Shauna, you want me to take that part?
Sure.
Is that okay? Mm-hmm. Thank you. So that insurance guy, well, we are an insurance agency here in Boise, Idaho, and we are licensed in Idaho as well as a few other states. And what we do, we think of ourselves as a small boutique insurance agency. And what I mean by that is that we like to make sure that we've got products that offer a variety of different styles and coverages for our clients. And so we sit down with them. Sometimes it's let's say methodical. I'll say methodical. And we ask a bunch of questions and we try and find out what your insurance portfolio looks like. What's your auto insurance?
Which by the way, whether you like it or not, or believe it or not, you've got to have a portfolio.
You do. And because, you've got a whole bunch of stuff that's, that's in there. Think about it. You have health insurance, possibly. You've got auto insurance. You've got homeowners insurance. You might even have some life insurance. You might even have a short-term disability policy that you're possibly looking at through work or whatever. We try and go through and look at all of those different things, and hopefully you're taking advantage of some of the offerings at where you work, because sometimes you can really get some great coverage through work and their various channels. And so we try and look at all of those things and let you realize the power of insurance and what it can do for you. And hopefully we can do all of that with a reasonable cost.
So if you put it in a historical perspective, our insurance for so many things used to be having a family, right? We had kids, because then they could step in and work, or work the farm or the business. And, that doesn't work so much anymore. So we've had to gravitate to other ways to protect us as we get older or we're driving down the road. So you listed off some different types of insurance. Are these all insurance products that you work with? I think we talked about health, we talked about life, we've got automobiles.
Well, we do farm, so farm,
Ah,
you mentioned farming, which was kind of interesting. And you mentioned the fact that, you used to be able to rely on family to help you, but all of a sudden in this modern world, it's not just, we have so many outside possibilities of affecting the business and how it's going to work.
well,
It's
and you've got kids that have their own lives.
correct.
They've
And
gone
maybe
off and do their own thing now.
yeah. And so all of a sudden you're here and you're trying to figure out, well, what's the best way to protect this? What do I need work comp for my employees? What's going on? And so again, all of those little aspects about all of that, commercial insurance, general liability, you might need some inland marine insurance for your, equipment and things that you have. And so we try and go through all of those things and figure out what we can best do to help. And so that's the idea. I mean, the bottom line, insurance is about risk. And what risk are you facing? And what potential risk or what potential loss are we looking at that we might need insurance to help? And all of a sudden in this day and age, for example, let's pick on your homeowner's policy. Can I do that for a little bit?
Sure.
So really, yes, it covers, there's 6 aspects to, your homeowner's policy. You have what they call the 6 different coverages. Some people call them coverage A, B, C, D, E, and F.
Yeah. Yeah.
So, that's the coverage A is your actual value of your property, not the land, but the actual home. Coverage B is for outbuildings and other structures on your property. Coverage C, that's your personal stuff inside your house. You can think of it, if I could pick up my home and tear the roof off and then literally dump it out, that's all your personal stuff that's inside your home. That's your personal property. That's coverage C. Coverage D is loss of use. And so if you have some sort of a fire or smoke damage or whatever, and you need to go spend some time at a hotel, possibly while the insurance company comes in and fixes everything, that's loss of use. That's what that coverage D is for, that 4th coverage. The 5th coverage is kind of amazing stuff. We call that general liability or personal liability. And that is traditionally a pretty large amount, somewhere on average around $300,000, if not more. That's designed to protect you. A lot of people call it slip and fall coverage. So you have somebody that comes to your house, you didn't clean off the walkway, that person slips and falls and gets injured. They blame you. And all of a sudden you're in the middle of a lawsuit and you need money to take care of that person. That's what that amount is for, that personal liability. But one other thing that's extremely unique about personal liability is most of the time, and you can ask your insurance about this, most of the time it follows you. So let's say that for Thanksgiving, you decide to go, let's say, help out a local, soup kitchen, or you're doing some volunteer work somewhere. The reason why I'm picking on the kitchen is it's really easy in that you have a big pot of hot gravy and you just pulled it off the thing and you're getting ready to add it to the line where everybody's getting food. But as you turn, you accidentally, just a minute. Sorry about that. Sean's going to go answer her phone. But you accidentally turn and you spill that hot soup on somebody, and all of a sudden they cry, "I'm going to sue you." Well, it was a complete accident. There wasn't any malicious intent. Again, I'm not an attorney nor am I a CPA, but there wasn't any malicious intent. So all of a sudden, your homeowner's policy, that personal liability, will follow you, and your homeowner's insurance will say, "Hey, we'll help you out if you get taken, into some sort of lawsuit or whatever." And that money, even though you weren't at your home, you were down at the soup kitchen or whatever, and it will help you. It will take care of you. Let's say you're up at Bogus Basin and you're skiing and you cut somebody off and they run into a tree and they blame you. That also is a thing where your homeowner's insurance is going to come in and step in and help you. And so homeowner's insurance is extremely powerful. And then finally, the last item that's on there is what we call medical expense. That's that coverage F. Traditionally, that's an amount of around like $5,000 to $10,000. And that's designed to give immediate care to somebody who is injured on your property. Let's pick on Thanksgiving, and somebody's slicing the turkey and they cut themselves with your knife because it's your kitchen. And now they're saying, oh, you need to take care of this. And so that person gets sent to the emergency room. They get a bunch of sutures. That bill's around like $3,000, if not $4,000. So that medical expense, that last one, is money that's readily available to get those kind of potential claims taken care of very quickly, as opposed to going through a general liability claim. So anyway, that's just some of what your homeowner's insurance does. That's the 6 basic things. Yeah, but oh my goodness, nowadays, I mean, I don't know, hopefully I see you're sitting down, Mark, but nowadays there's a bunch of other stuff that your homeowner's insurance might do. We could potentially add an endorsement for flood insurance.
Yes.
We can add an endorsement.
Unless of course you live in a floodplain, and you might not get coverage. Of course, this is the attorney, right?
Yeah. Yes.
Notice these things. Yeah.
Yes. And so, and the reason why I say that is like somebody, well, why, isn't flood insurance expensive? Well, yeah, there's some national carriers that specialize in flood insurance. Yeah. Sometimes those premiums are pretty expensive. Well, is there an option where you can add it to your homeowner's insurance because your homeowner's insurance is already in place? How much will that endorsement cost to maybe get flood insurance? And so those are some of the things that we try and do with that insurance guy. Maybe that's a sales plug, who knows? But that's one of the things that we try and do to try and balance that out. Do we need to go with a national company? Can your homeowner's insurance already take care of it? What about earthquake? What about equipment breakdown coverage for some of the?
We don't have earthquakes in Boise, Idaho.
That's funny. We don't have a lot. We did have one not too long ago. And what's interesting is our insurance carriers that we work with, the ones that do have that earthquake coverage, all of a sudden when the earthquake hit, they put a mandatory freeze.
They probably got a lot of calls.
And they just go through and they say, nope, you can't do the endorsement right now. And so
I have a question about all this, because that's a lot of information in actually a very short period of time. So Shauna, how do you gather the information that you can then go back to people and help them understand all this?
So COVID has made it really interesting to do that, because we're, of course, very careful, especially where Chris works so much with the Medicare age people. And my mother is in a home, and so I have to go visit her and make sure that we're safe. So we've done a lot of Zoom calls, FaceTime calls, just phone calls. We also have an online way to gather information. We have a great phone system and a great insurance management system that speak very well together. We were well prepared for COVID before it hit, gratefully, with our systems. So we're able to gather information. We just, we have to have certain information that we gather. So a lot of that is over the phone, or some people just want a quick auto quote or a quick home quote. We have standards that we go by, that we would like to see certain things like 100, 300 personal injury. Equipment breakdown is always an option, but we want to talk to them about that. So we kind of just have this, conversation back and forth until everything is set in place to make sure that we have everything right.
So they could go online and give information, but you're going to visit with them before you're all done.
Right.
Oh, yeah.
Yeah. And some people just want it online. Some people do not want it online. So we pretty much do whatever they would like. We give them the choices that we have out there, and we kind of go from there. We try to make it as easy for them as possible and tailored to what they would like to see.
So how often in all of that do you wish they knew more about insurance?
Oh, wow.
It would be amazing, especially, I sat for my exams a couple of years ago. I wish, as a homeowner and an auto owner previously, that I would have known half of that information, because I found out we had some holes previously and we could have done something about it, rather than, I mean, we had some interesting times early on in our marriage, and
Well, that's one of the reasons why I moved into the insurance career after some of the things that I learned as let's say a regular user of insurance. We went through some things that really unnerved my wife and I. And lo and
set us
behold, that's
back,
when, yeah,
too.
that's why around 9 years ago, I decided to get into the insurance industry. So that's why we're here now.
Yeah,
Your life
so
insurance a long time before that,
Yeah,
though.
yeah, that's true.
I would guess that if your business is like mine, people come in with maybe not the best understanding of what it is that they're doing, and probably without a really great appreciation for the amount of time and energy it takes to do it correctly.
Well, that's
so they want in 15 minutes, they want you to do all this.
So this is what's so interesting. I mean, I got to tell you, so Idaho in the insurance arena, I mean, we have the Department of Insurance, and obviously they say, here are let's talk about the minimum standards of auto insurance, for example. They have what they call a 25,000 per individual, 50,000 per accident, maximum amount, and then a $15,000 property damage policy. So we call that a 25, 50, 15. And that's a totally legitimate policy that we can write in the state of Idaho. Now, let's say that you, Mark, have that policy. You have $25,000 per individual for bodily injury, $50,000. Let's say there's two people in the car that, let's say you have an accident, you cause an accident, you are now responsible for those people, and your insurance steps in to help these people. So let's say that there was two people in the car. Let's say you hit a BMW, okay? And unfortunately, let's say this was a type of accident that they needed to go to the hospital and there's some things going on with them. Well, your policy from the insurance company is going to allow $25,000 per person, up to $50,000 total. And then you have the BMW that might be a $50,000 or $75,000 car, but your policy only covers $15,000. So this is why, sometimes even though the minimums are totally legal and you can get your little proof of insurance card that you can stick inside your glove box, is that really the best kind of coverage? Now, we don't want to necessarily overinsure because we don't want to waste premium. I mean, we do that ourselves. We don't want to waste our own premium. So Sean and I, we sit down and look at our insurance portfolio and say, yeah, is this good stuff to do? And we think a lot of the stuff that we have in our portfolio is a good thing to do. And sometimes you'd be surprised, like the amount from the least expensive insurance to, some really good coverage is only a few dollars. It might be 2 or 3 cups of coffee at Starbucks, on a monthly basis, that all of a sudden
that's a couple of $100 difference there.
Well, yeah, if you look at it as an annual cost, yeah, I mean, some people do budget those things, but if you're looking at it, I mean, some of our basic policies are around, we can have a 50-100 policy, which is $50,000 per person, $100,000 per accident. We can put $50,000 of property damage on that, and it moves up from there. We can have a lot of people who qualify, let's say, for an umbrella policy. Most of those base auto policies are what they call 250, 500, 100, which means $250,000 per person, $500,000 per accident, and then $100,000 in property damage, such as that BMW that you hit. And there's a few other things. Obviously, there's comp and collision, or I should say comprehensive and collision. Some call that other than collision if you want comprehensive to look at it that way. There's uninsured motorists, there's underinsured motorists. And so again, this is just in the world of auto insurance. And so, yes, we get these calls. Hey, I need a quote for insurance right now because I'm looking for a better rate. Well, is it just that it's extremely expensive, or are you looking at your coverage? I mean, what's going on? So we do ask questions. And so
And we want to keep it as low as possible too, and so we'll shop our different companies that we have as an independent agency.
and
So
it's
we
a
can keep it
wonderful
as low as
opportunity to
possible.
do that.
But
Yeah.
people will say, well, that's expensive, or this is expensive, but nobody says it after they're hit.
Yeah. Nobody complains about premium when you're in the middle of a claim. That coverage is huge. I mean, I have plenty of, oh my goodness. So stories, I have an example of a person, their family member was driving the vehicle. As they were driving the vehicle, it was late at night. The individual who was driving, one of their children, had a medical episode to where they literally blacked out at the wheel. They went off the road and they hit a home, and there's people in the home. And so they went through the fence, they hit the home. And so all of a sudden, here they are in this situation. And it was a lot of money. And just, like 3 or 4 months before, we just went through this analysis, and we threw $1 million umbrella policy on top of their $250, $500, $100 auto policy. And so the umbrella policy is it's just like it sounds. It's an umbrella, and that umbrella covers your auto and it covers your home. So in this case, the auto, even though they had a $250,000, $500,000, $100,000 policy, they exceeded the liability. And all of a sudden, if they would have just had that policy alone, it would have been miserable for them. But their umbrella policy kicked in. And so it said, hey, we'll take care of the rest of the auto. That's what the umbrella policy is for.
Okay, well, hold the thought on the umbrella, because we're going to talk about that a bunch later.
Okay.
And sometime I'll talk to you about the anesthesiologist I was doing some work for, who had a policy on the family car of $2,550.
Oh.
And the kids were driving that one.
Oh man. So all of these things, again, that's, even though the auto policy stands alone and the homeowner policy stands alone and the umbrella policy stands alone, they're all different products. They all work together.
Yes.
And so that's why, I mean, it's like a lot of times when you're looking at coverages, emergency roadside service, this is just something that's just, I think everybody should have. And so are there other ways to get emergency roadside service? Yeah. I mean, I'm not an insurance agent for AAA, but I think AAA is pretty good coverage for that. But if I have clients that don't want to do or use AAA, then we try and make sure that we put emergency roadside service on the policy, because you might have a child, let's say, that's going to school, like they're traveling to the University of Idaho, and there's a breakdown up in like Grangeville, and they need to get somewhere. Well, that emergency roadside service is going to help them get not only to safety, but to hopefully get their car worked on too. And granted, it doesn't pay the bill for getting your car worked on, but it will cover the towing expense and maybe a couple nights stay, depending on what kind of emergency roadside service they have. But I mean, there's some options there, and so those things.
Okay. That's a ton of information. There's a point to my interrupting here, though, is that nobody knows all that. No, I mean it.
Yeah.
People don't know, and they don't know what they don't know. I remember in high school, we took a class where we covered some of the basics. And so we understood a little bit about, having a homeowner's policy and some of the things that it covered. And of course, for driver's ed, you had to have a little bit of information about, an automobile policy.
Yeah.
But I don't know that that's the case anymore. I don't know if there's a way that people get educated on all this. So walk me through a little bit the process. If we could get people to understand that they really need some coverage, or they need some education, and they called up that insurance guy, what do you go? What's the process that you go through? Is this where Shauna jumps in and she picks up the phone and she starts gathering information? What should they have available to them when they call?
So when a lot of the information that we need can be found in pretty much just a few documents. So let's pick on the auto insurance. Well, we'll need a driver's license. On that driver's license, we have your driver's license number. There's your birth date. And so we do ask some personal questions. And so some people are under the idea, here's my name, here's my car. How much is it going to be? Well, you know, that's fine. But in order to really know, we need your driver's license number. We need your birth date. We need your current address, where the car's parked. And then some other information is that little proof of insurance card that's traditionally in your glove box. Hopefully it's dated properly, because it never fails. I mean, fortunately now we have the ability to get proof of insurance cards via PDF file, either text them or email them, because inevitably we get people that are pulled over and they don't put that little card in their glove box, and we need to email them the proof. So that way the officer can verify that they actually have current insurance. That's a whole other story. But yeah, so driver's license and your proof of insurance card will get us the VIN, the vehicle identification number, and a few other things. And so that's the start. But here we go, Mark. Are you ready for this? So when it comes to an insurance quote, an automobile, we can give you a general idea, but we will also ask you, have you been in any accidents? Have you had any claims? Have you had any tickets? Do you, for those people that we work with, some of them have had, like a DUI. So do you have to file an SR-22 with the state of Idaho? And so we ask these questions because that will give us an accurate quote. And
the reason, just so people get it, I mean, it's not that you and Shauna are that curious. You don't care that much, right? They're lovely, wonderful people. Thanks for calling us, but that's not why we need this information. You've got to develop a profile in order to then be able to go out and get insurance that's tailored to them.
Correct.
So they can't use my profile to get insurance for them.
Boy, so in this world of, I call it mixed use families, today we might have, let's say, some grandparents that might have a son-in-law and a daughter living with them, as well as their grandchildren. And all of a sudden the son-in-law and the daughter need automobile insurance because maybe one of their kids is about ready to drive, and they all live in the same house. This is unique stuff that we need to know, because all of a sudden the parents say, well, yeah, the child's going to be driving our car, but you're also at your parents' house. Is that correct? Well, yes. So will your parents theoretically have access to your car? Well, yeah. And so all of a sudden, I mean, how do we rate this car?
Well, when you say rate it, what do you mean? What do you mean rate it?
So cars are rated by how many drivers potentially can drive the car. Of those drivers, how many of them, let's say, have outstanding, tickets in the past 3 years up to 5 years? Are there any accidents or claims, such as glass claims, or locked out of the vehicle, or I have a flat tire, can you come change that? So those are some of the minor claims. You can be in an accident and it might not be your fault. For example, you might have a collision claim that's not your fault, but it was a hit and run because you parked out on the street, somebody else hit your vehicle. So all of these potential components drive us, no pun intended, to what your rate might be. And so what's the premium going to be? And all insurance companies, oh my goodness, all of them go out to these various boards, the motor vehicle reports, the clue reports. Those are your accident reports. And so all of that information is out there in the ether. We call the public information. And so that information gets pulled in, and that's where we rate the driver to the vehicle, how many drivers are going to be in that vehicle. Is the vehicle parked at home? Is it parked outside? Is it in a garage? So there's all of these little things that come into play that create what we call the rate for your vehicle or your premium.
Yeah, and the rate or the rating is really all it's doing is assessing risk, and it's assessing the company's risk in selling you insurance.
There we go. And so here's another way to look at it. All right, let's say I have a 1998 Honda Civic automatic, or I have a BMW 750i or whatever. You know, in your mind, hopefully this helps, because you would think that the BMW is going to have a little bit more of an insurance cost than the Honda Civic. And you would be correct. So what's the value of the vehicle? And so you might, oh my goodness, we just had a client the other day that purchased a brand new like Ford F-150, a beautiful truck, you know, but it's extremely new, and the insurance went up quite a bit. And they're like, well, hey, you know, I had a 2018 F-150. Why are you doing this to me now? Well, they're different vehicles. One's newer than the other. And because of that, we really don't know what the prospective potentiality for accidents are in the newer vehicles. And that's the other thing is I mean, you might have a Tesla, and there's some cars like, oh my goodness, like what is it? A Challenger Hellcat, or some of these other ones that are these high performance kind of vehicles that are available to people now. Those bring in a whole other aspect of how do we rate that vehicle. A gentleman, for example, just retires and he's so happy. He's 65 years old or 67 or 72, whatever he is. And he goes off and finally buys the Corvette of his dreams. And well, it might be a house payment, you know, to cover that premium on a monthly basis. And so that's why we kind of have our clients give us a jingle, and Shauna will chat with them, or I'll chat with them, and we kind of like let them know what they're looking at. But yeah, there's a whole world to getting a rate for premium.
Well, so there's two parts to this that I'm hearing. And again, rate means they're looking at their risk so that they know how to cover their risk, that you're gonna plow into somebody else's car and get a claim made, and they got to cover that. They have to cover that. So Shauna, you guys have to gather all this information, and that takes some time, I imagine.
Mm-hmm. And some people they really don't want to be bothered with their insurance. So sometimes we kind of have to extract it in the best way we can, and then move forward the best way we can. And we always have to run reports. It's required. And so those are, all those different reports come up anyway, and either validate. Sometimes they say, why is that coming up? I don't even remember that happening. And they literally don't remember it because they don't want to have to think about it. And I think that's where it's really important to have an insurance professional, that understands these things, start to prepare it for you.
So yes. So the answer is yes. We need somebody that can keep drilling down until you get a sufficient amount of information. You've got to have that information.
Correct.
And yeah, most of us would not be able to come up with it on our own. So you got to grab the information. Now, do you or does Chris then look at the different companies that you can connect with to then get this information out there, right? This is the next step, is you get the information out there, and then they look at it, they run it through their underwriting and come back and say, well, we can do this, or we can do this, or we can do this, or we can't do anything at all for you because you're not very bright or something.
Right. And if their vehicle's over 14 years old, we have to get pictures of the entire vehicle. and
Oh,
send
my.
them to underwriting, and then they unlock the quote, we get back in.
Yeah,
and
that's for some of our carriers. So some of our carriers are
Most of
age,
them, aren't they?
yeah, a lot of them are age sensitive regarding the vehicle. You know, if it's newer, I mean, it's easy enough to figure out. But if it gets older, you know, first of all, and because I mean, Idaho is unique. We're pretty dry. And because we're dry, we don't have a lot of rust. And so
Yes.
we have a lot of vehicles that last a long time if they're here in Idaho. But let's say that you go online and you buy a vehicle from Pennsylvania that's only 5 years old, or, you know, or some of those other, you know, even Utah. I think Utah uses salt. And so there's a lot of corrosive things. And so you got this beautiful looking car, but you look underneath and all of a sudden the rust on it's about ready to fall apart. And so, you know, so Idaho has a lot of cars that last a long time. And so the insurance carriers, they just want to make sure that the car is still in great working order. So we take pictures on all 4 sides and we submit those to underwriting, and then underwriting looks at them and approves them or disapproves them. And then we keep going forward. But it's all part of that process. Now, again, you know, Mark, we're just talking right now just about auto insurance.
Oh, yeah. Yeah.
You know, this
I was
is
gonna
all
move
auto
on.
insurance.
I was going to move on, but as a general, so most of what we've just talked about, at least the process procedurally, yeah, that's going to be the same from coverage to coverage to coverage. We've got to get some basic information, or a certain level of information that you've got to have. Got to verify it a little bit. You know, sometimes you use outside information to verify it. And then, shop it around is what I've heard insurance, you know, producers, the term that they use. Well, we shopped it around to see what kind of coverage we could get. But there's something we're missing in that. I think this is the attorney. A lot of people are going for, I just want the cheapest that I can get, which is usually the worst policy that they should get.
I agree. I think Sean agrees too.
Yeah, where in this process, though, do we educate people, right? Where in this do you sit down and say, well, yes, if you were in an accident and your fault, this will cover 25,000. But that's stupid. You should have way more than 25,000. You're going to be declaring bankruptcy, and then you have to go see my buddy who's an attorney. So I can only imagine, because I know my business, that there's some frustration around helping people get the policy and or the coverages that really make sense for them, even though all they want is cheap.
But what we usually find is they're coming from a cheap carrier and they have really bad coverage. Then they come to us and we increase their coverage for less than what they were paying in the first place. And that helps a lot, because
that happens. Not every time.
Not every time, but most of the
time. But it happens.
And really, we like 100, 300, you know, unless they have
just
an umbrella.
Just as a basic policy.
Yeah, basic policy.
So, yeah, well, so you're not going to get any disagreement from me with that. And in fact, I will take it a step further. 100, 300, I think should be minimum. I think the state legislature, and you two might have known some people that were once in the state legislature that could have taken this up for us, but
it was different then.
That was back then.
Cars were different then, you know.
That was back in the day.
That was back in the day.
But we want to think in terms of, well, yeah, if this happened and we got enough to cover X, Y, and Z. What people don't realize, so the story of the anesthesiologist.
Yeah, this is what I want to hear.
With 2050 coverage, right? He might as well just put a bullseye on his car and let people step in front of it, because what happens, right? They're not going to haggle with the insurance anymore, because the insurance company's going to say, here, take it all. We don't care. Here's the limits. It's yours. Now we're going to sue you because you have assets in excess of several $1,000,000. And this is a $7 million case. So thank you.
Yes.
And we're going to go after you. And so people don't get that just because you get 100, 300 doesn't mean that's all that will ever be the damage. That's they don't get that part. They think, oh, well, it's going to be limited to 100, 300. No, that's all your insurance is going to cover.
You know, there's one thing that, you know, that we kind of also look at, and Sean and I might have this conversation while we're chatting with these people. It might be either with them or off the phone, but we try and assess what I would call a suability factor. And that seems kind of weird, but the idea is this, is here. Okay, so we talked about liability, all right, for your policy. So let's take a look at the maximum liability for an individual on your auto insurance, which for a single individual on a 100, 300, 100 policy is $100,000.
Yeah.
All right. That's going to help that person when they get into the hospital. That's what it's for. Now, what's the likelihood of that if they're in the hospital, heaven forbid, what's the likelihood of that $100,000 being blown away fairly fast if they have a $350,000 insurance, hospital bill? So that's one aspect. And then we look at the home, and there might be a $300,000 personal liability, coverage on their home. So if we add those two things together, the $100,000 and then maybe the $300,000, we're looking at around $400,000. Now, in this market, especially here in Boise, as was in the Treasure Valley, property values are moving up. The homes are moving up. Everything is moving up. I mean, does your estate, and this is where they can obviously chat with you, Mark, but what is their asset value? What are they worth, let alone what they, so we look at that, and if there's excess, that's when we'll talk about umbrellas later, but that's a huge thing. I mean, it's so easy. In the case of an accident, you have $100,000 in coverage. That's it. If you have a home, automobiles, whatever, toys, four-wheelers, whatever. I mean, they're going to look at everything that you have, and that's your asset value. And if it exceeds the $100,000 on your auto, then all of a sudden we go into the legal world, and that's where you get involved.
Oh, yeah.
And so that's a tough thing to try and teach people, especially when they have a teenage son or daughter and their insurance premiums go up, and they say, we only want a 25, 50, 15 policy because it's too expensive to insure my child because they're 16, brand new driver. And by the way, they're going to be driving, either an F-150, a newer car, or whatever, a Honda, be it whatever, and so all of a sudden the teenager, the brand new driver, is driving a $50,000, even a $30,000 car. I mean, that's why those rates go up.
Yeah. And again, from the ex-litigator standpoint, I don't even care. They can be driving a $2,000 car. That isn't the issue. It's who they plow into because they were chatting on the phone and they blew a stoplight or a stop sign, and they ran into a car that had 6 teenagers in it, and they all have, multiple injuries. 25, 50 isn't going to do it. So that's one thought. Let me go one more place, and then we're going to come back to this concept of the umbrella policy.
Okay.
Again, it's kind of the process. And so Shauna probably gathers the information as much as anything. Are you the detailed person, Shauna, and you get the information?
Kind of the organized, detailed kind of
She's
person.
amazing.
Yeah.
I don't know why I thought that.
Oh, that's so funny.
Really hard.
No, really.
Okay, so now you pull that information together, and then do you and Chris kind of then chat about it? You look at it and you go and you supplement this with conversations with them. And then the two of you kind of decide, well, that makes sense to send off to this particular company, or that makes sense to send off to this particular company. Or in my head, here's the image. You put it on the fax to a number of different places and you see what you can find.
It kind of varies, actually. It depends, we normally talk about whatever we're thinking. I mean, I guess each individual person that comes to us, we kind of talk about it, what would be the best fit. Each company has their own niche that's, important to understand. But a lot of times we'll just test it. We'll send it to a lot of different companies and kind of test it to see what we're looking at as far as rates. And then we'll kind of fine tune it at that point once we kind of decide on something that looks the best.
Okay, so this is a very interactive process.
Mm-hmm. And with our underwriters as well.
Yes.
Like you're out there, talking to underwriters as well.
Well, and that's your job, right? You're the intermediary. You're the person gathering the information, interpreting it to the insurance company. The insurance is coming back to you, and you're interpreting that to a client, to a customer. And thank goodness you do that, because most of us have no idea what they're saying. I used to litigate a number of insurance policies, and I finally understood some of it. Because there's a lot to cover, and so that's a service that you provide. And there are those that just want cheap. I mean, they just, hey, listen, this is what I had. Can you replace it? Right? Can you just replace this? Is what I have. At what point do you sit down with them and say, okay, yeah, but here's some things that maybe you should be thinking about?
Going to take that one?
Yeah.
Because we do a lot of that through this process, because all of a sudden somebody might come up to us and they'll say, no, I just want the cheapest. I want 25, 50, 15. And I'm like, well, why do you want that? Well, I just want to make sure that I've got my ability to drive down the road. Well, if you're going to consider that, for a few dollars more, how would you like to double your coverage? Well, can I do that? Well, yeah, possibly. Can we take a look at those options for you and present those options? Well, yeah, let's do that. I mean, because it's the reasons why we have all of these companies is that these companies are different. And so, like Shauna mentioned before a little bit ago, that we just had a gentleman, for example, he's a younger guy, he's single, lives out, let's say in a not here in Boise, but different city nearby. And that's the other factor. Did you know that the insurance rates for one county is different than another county here locally?
I did, yeah.
And so if you live in Ada County, your rates are typically better than if you lived in Canyon.
Oh, is that right?
Yes, and I can't figure that out why, but apparently it deals a lot with the traffic that comes into Boise. So obviously there's more accidents from people in Canyon County because they're literally theoretically on the road more. And so insurance is based on statistics, and they can nail it really well.
Yes.
Okay, so anyway, back to this guy. So this guy calls up and says, well, I'm with company X, and this is how much I'm paying. I've been with these guys for a while, but I feel like they're raking me over the coals, and we're like, well, let's just take a look, because we can't necessarily guarantee anything, but we can look. And so we took his existing coverage and did an apples for apples quote, and we came back with some really good rates. But then we said, well, it might be better for you though to elevate these a little bit, so can we look at that and just see what we come up with? And we did, and we still were able to save him some money on his premium. And it's not always about saving money and all that other stuff, even though that's really nice. It's nice to make sure that you've got the coverage that you need. And so we try and talk about all of those aspects because, to us, and so people are saying, well, what do you mean coverages? So really quickly, there's bodily injury, there's property damage, there's comprehensive, there's collision, there's uninsured motorists, there's underinsured motorists. Maybe there's some sort of roadside service. And then finally, there's also what they call rental reimbursement. So if your car is in a claim and it's in the office, and you need a vehicle, then a vehicle can be provided for a rate of a particular rate on a per day basis. And so that's kind of like a standard auto policy. Now, there's other things you can add onto that. If you have added some bling or whatever to your vehicle, or your truck's been lifted with a 6-inch kit, or, and so some of those endorsements can be added. But, the bottom line is that, this conversation happens as we move along. And do you realize that you have literally the basic policy of the state of Idaho, and that if you were in an accident, your personal assets are at risk of being pulled from you? Do you understand what that means? You would lose your home maybe, or you would lose some other things. Now, I know that again, I'm not an attorney, and I know that there's some aspects of where, homes and maybe some other things are protected a little bit, but from my knowledge, assets that are available to other people to get a hold of are available potentially in these kind of situations. And so it's just best, obviously, to talk to someone like you, but heaven forbid we need to do that. But it's just best to use the inexpensiveness of insurance to cover risk.
So let's go there. Let me back up just a little bit. So you've got, you do life insurance. You can cover life insurance, some disability, health, automobile, of course, homeowners. You work in the Medicare, so you do Medicare Advantage and supplemental.
Yes, supplements
programs.
And all that stuff. Yes.
And so you and I, when we were discussing offline, when we first started, we were talking about, I get phone calls quite a bit from people that go, I want to talk about asset protection. And it's great. Let's talk about that. And often they want something maybe a little bit exotic. They want something so that if one, which is always interesting, I want to make it so I can't get sued. Well, there is no program for that other than stay in your house and never go anywhere. Two, if I get sued, I don't want them to get anything. And so then this is horrible. I start with, well, we can open up an account or a trust based out of the Cayman Islands. And, I think we can get you going for about $25,000. Well, that's a lot of money. I go, well, yeah, but that doesn't even cover the trip out there and then setting up the reciprocal account in Switzerland so that if you needed to protect those assets that nobody gets, oh my gosh. So what else do you have? And I go, well, let's do a little audit. And the first place we look, what do you have for insurance coverages? And I realized to them, that's not sexy, right? This is not the, I don't have that really exciting different type of an irrevocable trust. And we can do that kind of stuff, but let's be realistic and let's start with the coverages. And so we have that conversation, we talk about coverages. And so the next part of that is to send them back to their insurance people and say, okay, now let's talk about increasing your coverages and let's talk about diversifying your coverages a little bit. So that's really an excellent place to start, I think. So if anybody ever asks you about protecting assets, do an insurance audit. Where are you on your insurance coverage? But the second thing, or the next thing that I talk to them about a lot is looking at umbrella coverage, because an umbrella coverage or an umbrella policy is stupid cheap for the amount of coverage that you get. And for the most part, it's not that hard to get. So help me walk through that. Where we start with these people is if they have a homeowner's policy or if they have an auto policy. Between one or the other, they can generally step up to an umbrella policy fairly readily. Talk to us about umbrella coverage.
Do you want to take that one too?
Yeah, that'd be great.
Okay.
You could take all of them if you want.
Oh, you're so kind. All right. So this is okay. We're going to discuss the power of insurance. And this stuff, all of this stuff excites me. So again, that was great. I loved how you said that, because I call it an insurance portfolio. I mentioned that at the beginning. And in your insurance portfolio, what do you have as we review all of these things? And I talk to people about this, and Shauna does too. And so here we are, we're talking about umbrella. How does umbrella work? Well, an umbrella policy typically starts with two components. And those components are a homeowner's policy and an auto policy. All right, that's traditionally in a home, and most people have those, or even renter's insurance or whatever it may be. But the key here is that the auto policy needs traditionally to be at a specific level. And again, I mentioned that level before. It's around $250,000 per individual, $500,000 per accident, $100,000 for property damage. That's the start. 250, 500, 100. And so if they have that kind of stuff on their auto policy, then we take a look at their homeowner's policy. And traditionally, you need to have at least $300,000 of personal liability coverage in order to qualify for an umbrella policy. Great. So let's say that you have both of those things. Then what do we want to do about the umbrella policy? What does an umbrella policy do? So traditionally, you can have a rate or a premium cover, you can have a rate or face value, let's call it, even though face value typically deals with life insurance. But umbrella policies have a value. It can be $1 million or up to $5 million, depending on what company you decide to use. And so you can always ask your insurance agent about that. You can say, you call them on the phone, say, hey, I'm kind of interested in an umbrella policy. What do you guys have to offer? And again, they'll typically start at $1 million and go to $5 million. And what an umbrella policy does is just like how I explained before in the situation of one of our clients. We had a client that had an automobile accident situation claim, all of those things, where they needed more money besides what was given them. So I mentioned that the client had a child who hit a home. So the home needs to be fixed, as well as the fence and everything else. That's property damage. The property damage coverage that they had on their policy was $100,000. Now, the property fix was more than that. It was quite a chunk of change. So then when that part of the auto policy liability was exceeded, then the umbrella comes in and takes care of the rest up to $1 million. That blanket coverage, that umbrella coverage. And so the bill was like, I think around 200 and some odd $1,000. So the first 100 was covered by the auto policy, and then the remainder of it was covered by the umbrella policy. So, and
to do that, roughly what's the cost for the coverage?
It can be depending on how, okay, so umbrella policies also, remember those little things that we talked about? What information do we need to figure out like the rate of an auto policy, or same thing with homeowners? We haven't really even gotten into homeowners, but so homeowners, like, let's just do this really fast. You might have one of those architectural roofs, you might have stone flooring, or you might have hardwood flooring, you might have custom kitchens, custom bathrooms. So again, all of that stuff helps prepare the rate for a homeowner's policy. So an umbrella policy, how many cars do you have? How many, do you have a boat? Do you have any motorcycles that you drive? Do you have any side-by-sides or four-wheelers? So what do your toys look like? So you might have autos and toys. Do you have an RV or a motorhome? Tell us about your home. So the umbrella looks at all of those components. How many drivers do you have? Are any of your drivers under 25? Things like that. And if so, how many drivers are under 25? And if you're a family of like 5 or 6 kids, that gets thrown into the assessment of how much the premium may be. So let's take a couple that's older, clean driving record, maybe 2 cars in a home, and everything's looking pretty good for them. They might find $1 million policy for around $300, maybe even less
A year.
a year. That's a year. $300 to access $1 million if you need it. So yeah, when you were talking earlier, it's ridiculously cheap to gain access to that money.
Yeah.
And so, but let's say you've got a family and it's a mom and dad, whatever, 3 or 4 kids, possibly 4 to 6 vehicles, maybe a boat, maybe 2 motorcycles. You know, if you're doing that, you're going to be looking at possibly around $600 to $800 potentially for $1 million policy.
That's still not very much money.
Not for
Not
what
for
you
the
need it
coverage.
for.
Not if you need it.
Yeah, not if you need it. Oh my goodness.
Yeah.
You know,
Yeah.
and so can there be situations where you find policies that might even be more expensive than that? Well, sure. Depends on the situation and what they do.
The company too.
Yeah, and the company, and we shop these things around. And a lot of times it's really nice to try and bundle the umbrella with the same company that you have your home and your auto insurance with. We try and do that because when you're bundling, it really does help, and it also provides additional discounts. And so that's huge.
And simplifies it too for them.
Really
Yes.
simplifies their billing, simplifies all of that stuff, and that's really important. But what's really nice though about an umbrella policy, and we also try and figure out, well, if they're going to have, we have, let's say a brand new client comes to us. Let's say somebody comes in and says, well, I've got a home, I've got an umbrella policy, and I've got an auto policy. Well, so we're thinking, all right, these guys are already in tune. You know, what's going on? Let's find out what's happening. And then, you know, we ask questions like, well, do you ever do any world traveling? You know, do you like to travel? Or do you go to different states or whatever? Because an umbrella policy can potentially follow you anywhere around the world. So that liability, that $1 million, not always.
That's why we like to look at the individual.
That's why you've got to ask the questions. That's
why you gotta
why
answer questions.
they get irritated with you, because you're going to keep asking for information until you have enough to.
And they do.
Sometimes they do.
And we do have people that just say, well, this is just too much. I can't take it anymore. And we're like, hey, please consider us in the future. Can I call you in 6 months when your policy is about ready to expire? You know, and just little things like that. That's just, we try and do stuff like that. But
isn't it crazy that they get irritated when you want to do a good job?
It's all right.
Drives me crazy. Crazy.
Man.
Well, listen, I got to wrap this up and send it home. And so we covered a whole bunch of stuff. And I get it. People don't take the time to understand what's going on. And I know kids that just want to get a driver's license, you know, and start driving. They got to get, you know, basic coverage. So I appreciate you spending time. Like I said, when people come in, I want to do a risk audit with them. First bit of information we got to find out is, well, what kind of insurance you got? You know, what coverages do you have? What are the amount of those coverages? And I know it drives them a little bit crazy, but that's the best place to start. All right. So that insurance guy, how do we find you?
208-884-4224.
Yeah,
Okay.
I always think of this little jingle. I go 208 and I go 884-4224, beep beep.
Yes, I've heard that.
Or it's Chris at That Insurance Guy, or Shauna with a W at That Insurance Guy.
At That Insurance Guy.
.net.
.net. We got
.net. Okay, very good.
We also have the webpage at That Insurance Guy. www.thatinsuranceguy.net.
.net. All right, very good. And you know, if people had questions, could they call you and you'd share information with them?
Oh yeah.
Absolutely.
Yeah. I mean, and again, we're here as a resource, you know, and that's, and I kind of work with that. I mean, like tonight, for example, I'm heading off to for an educational moment to talk about homeowners insurance, you know, with another group of people. And so we're here to help, and we try our best. And so there you have it.
All right, well, very good.
Questions.
Excellent. Well, thank you for spending time with me today. We will catch up with you. Good to see you again, cuz. It was second cousin 2 or 3 times removed or something, but yeah, we're cousins. And you guys have a great afternoon, and we'll catch up with you later.
Thank you,
Mark, you're awesome.
Yeah,
Appreciate
you are.
all you do. You're a
All
great
right,
guy.
take care. Thank you.